Hello and welcome everyone. This is John reporting for the Bottom Line Commodity Report. It is Sunday, July 28th. What I plan to cover is tonight some of the markets, the commodities, what happened, and what I'm looking at to see if I can get a read or a tell on this advancing stock market. As you can see, we've been in this kind of range here since we formed almost a quasi-doji at about the middle or beginning of July here on the 12th. We had two solid dojis stalling the move to the upside, a low close doji that followed the other day, of course the 24th on Wednesday. The market did go down, came right back, forming these hanging man formations, and this Friday did the same thing. Looking at the advanced decline, it didn't make newer highs, but volume was on the upside on a positive closing day. When we take a look at a weekly chart real quick, we'll notice that we pretty much did follow suit with a small range, narrow ranged weekly move with a quasi doji. Now that's just the S&Ps. Volume on this little rally here hasn't been great, but the market, one of my concerns is we did break out of an old high and we've maintained that close or close above that level. We didn't form an equal and opposite. So markets maintain two weekly closes above that old resistance. That could possibly propel us for one more leg to the upside to test this area of resistance. It is very possible. We have to keep our eye out on this volume level right here. If we start to see the market get back above or attempt to get over 1700, we could see, easily another 50, 60 points in the next few weeks. It is possible. I have been looking for this market to kind of peak out here because the volume action has not been terrific. In fact, it hasn't been terrific on multiple indices. Let's show you which ones. The Nasdaq, for example, made a new weekly closing high. Not by any significant amount, but it still made a weekly closing high. Advanced decline didn't move, and the volume level wasn't terrific once again. Now, these are weekly charts I'm showing you, so it shows that even the weekly momentum has been waning, and there's a lack of participation in this market. When we take a look at the Russell is kind of the same way. I'm using the Russell iShares IWM, each exchange traded fund, to take out a look at this volume, looking at the weekly as well as the daily volumes. You can see we generated a low close doji here. We really didn't decline. We have an advance, but we more importantly didn't decline. So we are in a stall pattern. It's just that with the Nasdaq having this kind of like rally surgence, we had a low close doji, and then you make a quasi high close doji right away on a Friday. So this is a little bit tricky in here to see where do we go. Are we going to consolidate more, or do we have more upside? Based on the advanced decline on the multiple of indices, it looks like we're going to try one more test and see if we can manage to make maybe a break. And I don't know if we can see 3,200 in the next month in the Nasdaq. It would be another 125-point move for the Nasdaq alone. But certainly we can see us taking out the highs that we just made last week and a half, possibly getting into the 31 and change. We got to see if there's going to be any volume associated with this move, and that's been one of the big question marks. We have had the Nasdaq, as I bring this into Speed Force, on a weekly basis. There just hasn't been that volume associated with this move. So we have a divergent situation. On the other side of the coin, it's not going down. So this is the key. Is the market going to try to maintain higher highs, and then will volume finally come up into the play? That is possible. So we have to be on guard, A, that this rally can peter out and just decline at a moment's notice, because when if the buyers aren't joining the party here, as this volume indicates, once the buying does dry up, if sellers step in, they could really knock this thing down. On the other side of the coin, if everyone feels that they're missing this move and they see higher prices coming, you could see a surge in the volume to the upside. So I am being cautious on both of those observations, because the key to this market is this advanced decline. We're seeing widespread market participation, and it's not just a few names, it's multiple names going to the upside. The problem is it's just on very light volume. All right, so in wheat, we had this potential move to the upside. It failed at resistance. It's come back down. We've just seen this market give us a doji, a low close doji at the lows. We're in a seasonally strong period of time. We form these kind of dojis that are starting to show us, are they failed dojis, or are these particular dojis starting to show that the bearish momentum is waning? When we take a look at the monthly chart, we're against this moving average crossover in this huge multiple month support area, and we're just at this kind of gravestone doji on a monthly basis. We're in a seasonally strong period of time, so I'm thinking that possibly there was a little bit of delay. We bought a put to protect ourselves, which expired. We rolled out of it. We ran the risk of if the market had expired and popped to the upside, we would have lost all the money on the put. As it is right now, we have a stop in the market at 42, and we're going to maintain that stop for now. I wanted to roll into the September options, which expire in the August, except for the premiums were just so outrageous. It would just been better to just place the stop and look for another trade. So that's the plan of attack right now. As far as all the other markets are concerned, looking at bonds real quick, not a lot of help here. I mean, we had a couple support and resistance targets that we laid out. We kind of hit that level last week or the week before at 136. That was the first target. Next target would be about 138. And, you know, when we look at the monthly chart, one of the things that I see with bonds is that we've made substantially lower lows, but on a not convincing volume, kind of the opposite of what the stock market is doing. So are these long shadows in here showing people covering the shorts, and we've got this gap between the moving average and price? So seeing as now we're coming close to the end of the month, which is next week, you know, do we have a little bit of a pop back up in the market? If bonds pop back up, guess what happens to stocks? They're going down. So you know, we're not getting a lot of clues or hands here or insights from either the stocks, but we are looking at some potential light volume on this decline in the bonds, so that might give us a clue to the S&P's topping out going into August expiration. Looking at gold real quick, the gold market typically bottoms out, and it's come to its typical seasonal trend. We haven't had a great move, but I think any rallies up near 1378 is going to be met with a little bit of sell-off. You've got the public here, barely long. When I say barely long, they're long 500 contracts. I mean, that compares to, you know, when they were long 61,000 contracts. So that's a neutral position. So the market's bottomed out, and guess what? The small speculators aren't really even in this market. Hedge funds are still mildly long, so they believe this market. But I just don't think there's enough momentum to get this market sustainable above 1382 in the next week. So I would look for any pullbacks. And again, gold's been a very tough market to trade for yours truly because of the margin requirements. Just to get into a marginable situation here, it requires a lot of money. Can't use options on the futures because they're hard to implement strategies due to their illiquidity and wide bid and ask spreads. So the only other way we've been trying to play this and giving you advice to follow has been in the GLD, or as well looking at gold miner stocks. So we'll continue with that plan of attack in the next few weeks. The next trade that we did talk about in the trading room is the Japanese yen, and the Japanese yen has a tendency to rally. I think most of everyone that was there for the Tuesday planning and scanning session did see that we had the right call in that the fact that the this is the time of the year that we see a move in the Japanese yen, and Wednesday it opened a little lower, Thursday it rallied, Friday it rallied more. So I'm thinking that we've got a good shot between now and late August or so to see a move to test back to that higher or a little higher. Volume's starting to look pretty good here to me on this move. In other words, we kind of saw a nice little trend breakout, so it looks like there is an accumulation of longs coming into the marketplace right now. But I would wait for another pullback because we did not generate a weekly buy signal. One nice thing is that when we take a look at this move, let me see if I can share with you what I'm about ready to show you, is that when the market rallied to the upside, this move to the upside, it had a nice 50% or more correction to the downside, but not in volume. Volume held up pretty well, so it shows that people weren't that aggressively short the market. So we probably could get this market to test about either the midpoint of those equal and opposite, meaning this candle went up, this candle went down. We could probably come back, test this high area in here, right around 104.50 to 105. So, I mean, that's about a 300 to 350 point move or so. I would look for downside support around 139, 140, something like that, 100, let's call it. Back into this zone here, I would look for that to hold. And that's what I'll be looking for this particular week. So we've covered wheat, gold, bonds, and S&Ps. I just don't see the other market of interest, crude oil, in here from a monthly. We're at the top end of this range, kind of speak. As you can see, we broke out of this multi-month wedge formation, and the market's now testing and have created a new pattern. It looks as if we're in a range. So I would say that on a short-term basis meaning in the next 2-3 weeks, for the month of August, theoretically, we're already projecting a move to 116 from pivot points. Now, I don't know if that's entirely possible, but I'll tell you this. If the market does break down below these old highs, and I don't want to take the absolute high right here, I want to take the average of highs. So this high here, these highs right there, these highs in here, so right in there. So it's back under 98. So a break back under 98, then I could probably say, all right, that would be a plausible outlook to see the market come all the way back down to like 86, 87, at least challenge the range. So it broke out to the upside. It should make a higher, if it made a higher high and breaks back into this channel, and if we are making higher low channels, so then we'll probably get back into like 91, 92. So that's 700 points in there. So I think the risk is the market could blow off to the top for whatever reason, but I think there's the bigger risk is to the downside from here in crude oil. From a seasonal perspective, we start to peak out. So I'm not interested in looking for an 8-cent move when there's probably maybe almost a 20-cent move to the downside. So there's more risk to the downside than the upside. That's all I have for tonight. I hope that information you found helpful. And of course, if we see anything, we'll email it and talk about it in the trading room this week. Everyone, hope you had a great weekend. Thank you.